live. Welcome everybody to another weekly live stream. I wanted to go live a little bit earlier today just because we've seen so much volatility over the past couple of hours just from the whole market. So in today's video, we are going to be talking about how to swing trade, my strategies, my mindset, all of that stuff. So I hope you guys all enjoyed this. If you have any questions, feel free to ask down in the chat. One of the things here when it comes with swing trading is people think that it's easy or an easy way to get rich quick, and it is not. Swing trading is a job. It's investing. You have to look at everything. So the biggest thing is to try to learn as much as you can. For those of you that don't know who I am, my name is Carter. I'm a full-time swing trader. I know I'm bouncing around a lot, but we do have an amazing school where I teach people my strategies, my approach, all of that stuff. And if you guys are watching on TikTok, we are also live on YouTube. So check me out right there, and we'll have the charts and all of our stuff up. But you guys can also ask questions there. So one last thing before we jump into how to swing trade and pretty much how to grow an account to like 100K, let's look at our school. So for those of you that don't know what our school is, it's a course where I teach people my strategies, my approach, how I find stock and opportunity, and we're doing a great sale right now for $50 off by code live $50 off. So check it out down below. And let's jump into this here. So when it comes to swing trading and trying to grow a small account here, you have to have some sort of checklist or plan before you guys trade. So for me, I have a checklist. I have my trading notebook right off to the side here. So let's go through them, and then with each stock we talk about, we'll make sure we talk about our checklist. So the first thing I have on my checklist is an upward trend. Trends, in my opinion, are one of the most underutilized things traders, investors don't look at. They look at a stock on a downward trend and they expect it to magically recover, when it's always better to just hop in the trend. The trend's going to carry the stock. There's buying pressure. Often there's going to be more volume. The next thing is the stock on some sort of support line. So a support line could be a moving average line. It could be a certain price where we get buying pressure. Another thing, what's the RSI at? The RSI, Relative Strength Index, tracks momentum. For me, I look at anything under a 30 on the RSI. Another one, when is the earnings? You never want to hold a position for a trade during an earnings report. Next thing, risk and reward. You always want to make sure you're risking $1 to make a minimum of $2 to $3. Obviously, the higher up you go, the better off. And then the last thing is the stock price. Looking at other time frames to determine if you should buy the stock. So those things right there will really help you and start separating yourself to be a better trader, because instead of just buying random stocks, you're buying stocks with a certain criteria that you can use to make money, because you're buying stocks that are undervalued, on a support line, all that stuff. So let's look at a stock here. Ticker symbol PR. This is the trade here, trade of the week that I traded, and guess what? We lost money on it. And the thing is trading it, you're never going to be 100% on the money every single time. So let's talk about this here. So going through the checklist, upward trend, check. Sold off to a support line at the time it was trading for near and around 1511, check, because we have good buying pressure, good, recently hit it. We also have the 200-day moving average line. The RSI, this is where things went wrong. The RSI was trading for 35. Normally we want anything under a 30 on the RSI. So this is for future. When growing a small account, or an account in general, to get to 100,000 or your goal 10,000, whatever it is, you have to be very on the money, right? You can't adjust your checklist due to wanting to trade. And I wanted to trade honestly for a couple of reasons. One, to try to grow my small account, because for those of you that don't know, I am doing a small account challenge. And even with a large account, you have to do your checklist. So for me, it was under a 30 normally on the RSI, which this one here is trading for 34, so it's higher than under a 30. So that's why we had some more sell off. Another thing here with the stock here is the earnings is next week. The risk and reward was really well, because you could hop in at 15.11, set your stops at 17, 3-to-1 risk and reward. And then the last thing here was the hourly. Looking at the hourly, you guys can see that there's two approaches when it comes with trading. The first one is hopping in on the hourly support, which does a good job. And you guys can see actually I was up pretty handsomely on this trade, but then it hit that moving average line and just sold off. So, one of the things here you guys can do as well is to enter on the breakout of the 200-day moving average line, because the last time it did that, you guys can see that the stock rallied its way up ever since it broke out. If you guys are watching on TikTok, go check us out on YouTube, where we're actually talking or showing and breaking down charts. Carter Farr on YouTube. Thanks everyone on YouTube for hanging out with me. But yeah, so you guys can see heavy support here, and then it just broke down. And the thing is with trading, with investing, you have to have some sort of stop loss, the max amount of money you're willing to lose on a given investment or a given trade. So with this one, I pretty much stopped my losses right below the lowest wick on this candle, which was at about $14.66. So for me, I set it below that at about $14.55, right in that range is where I cut my losses. You guys can see doing that prevented a huge drop, because today it sold off almost 7%. So doing that saves some money. So another position we're in on, Alphabet. You guys can see it did break through that trend, which honestly not that big of a deal, because Google, Alphabet, I'm willing to hold this for a lot longer. Just because it's a blue chip stock. It sold off from the highs a good amount, and I own a bunch of Google, so I always can send it to my long-term portfolio. Same with Microsoft, similar thing here, trying to buy it at a cheaper price. Not as much in tune with swing trading or trading, but more the lines of okay, this thing's super undervalued. We're still getting good revenues out of it. And the last one here that's more of a trade is going to be Costco. Costco stock has that heavy support on the hourly to see if we can get that push going higher, to see if we can get that breakout of one of those moving average lines. So those right there are really, really awesome. And if you guys are watching, make sure you guys hit that like button right now. Double tap on the screen on TikTok. Hit that like button on YouTube and follow me. Follow me for more, swing trading and money stuff. All right, so now let's talk about stocks with opportunity. How do you find these plays? What's the best approach? So going through your checklist, right? With any scanner or anything, you just have to go through your checklist. You have to just implement all of that, and that's why having a course. For those of you that don't know, I do have an amazing course. Where we have these scanners already pre-made, and you guys can copy them, or you can adjust them to your own style and trading. So looking at EC, one of the reasons I like it here is obviously the hourly doesn't look that good, but for me, I look at more the lines of the daily, just to get a general idea of what the stock's doing here. So we've actually traded this stock in the past here. One of the reasons I like it is we do have this relatively decent trend where every time it hits this, we get good buying pressure, right? You guys can see boom, boom, boom. And then as far as along the lines of, resistance, you guys can kind of see, whoops, that was a bad line. You guys can kind of see here. Let's move it out a little. Little bit here, and then a little bit going this way. So we could see a move from this 10.05 area to like $12 would be the plan, right on that moving average line as well as the trend line. So we have a couple of supports in our favor. So somebody said, I own Microsoft to my Xbox is Microsoft. Awesome. Yeah, I own Microsoft. Microsoft is great. I love that company. I think that we've seen a little volatility, but hold it for a while. I think it's a good approach. Another one here is another stock that sold off a bunch and could definitely see some room to move is ticker symbol CLSK. CLSK, as of right now, it's trading for right on a heavy support line. It's on the 200-day moving average line, which is a heavy support for the stock. We could see a move from $14.20 to about $20. The risk and reward is there. Looking at it here, boom. Setting your stops just below it. Your target up here gives a risk of 7.3 to 1. So risking $1 to make over $7 on a trade, which is awesome. So this is how you grow an account, is by doing your due diligence, looking at this, finding these plays, all that stuff. Then we got Marathon, ticker symbol MARA, Marathon Digital. This one here just has heavy support on $17.60. You guys can see every time in the past, all the way since December 2023, we've had buying pressure at $17. So sold off back down to those levels. Could see a nice move. Somebody said everything in my Microsoft besides my phone, because phone is iPhone. Awesome. Yeah. So iPhones, great stuff. I think that Apple too could be a little undervalued. Apple is going to be releasing their Apple phone, their AI phone, which could be a huge bullish thing for the stock. It sold off from $237 to $217. Percentage wise, that's a sell-off of about, right now it's about 5%, but from peak bottom to peak top, it was about 8%. So could see a nice room to go back up. And Apple here, very, very stable company. It's not going anywhere. Another one is Ares Capital, ARCE, sold off from this heavy, from this beautiful upward trend, sold off a bunch today, 2.4%, largest decline we've seen in the stock all the way since about 2023. So could definitely see some buying pressure out of this, and this is ARCE or ARCC, not CE. But the reason why this one looks good too is it sold off. It's undervalued on the RSI as of right now. The dividend's 9%, so you always could hold it for a little bit, hold it through a couple of months to get some good dividend growth out of it. Yeah. Another one here is Amazon. I think Amazon right now is severely, pretty much undervalued. And I know they just released an earnings that could say differently. I understand that. But Amazon, heavy support on this trend. Look at this trend. For those of you on TikTok, go on, check out our YouTube channel. We have the charts all up, or just look up Carter Farr on YouTube and you guys will see me. So you guys can see each and every time it hits this yellow line, we have buying pressure. Sold off down here and immediately got bought up. So we could see a move from like 167 to at least 190 to try to fill that gap, or go up to like the 90-day moving average line. Something like that we easily could see. Amazon, good stock. I'm excited to see where this one goes. I think that, yes, if we can get some sell-off, kind of like how we have, this represents a good time to buy it. I ordered my stuff off Amazon. Let's go. That's what I order stuff off Amazon all the time. This one here, ticker symbol ARGX. ARGX here. This one here is called a golden cross, which was one of the reasons why we could see more buying pressure out of it. So you guys can see it broke up. The 50-day moving average line broke up through the 200-day moving average line. So we could see a nice move from there. So historically, every time it does that, you guys can see the last time it did that, broke up. And ideally, you want to enter same thing on some sort of support line. This is just a bullish thing for the stock to do. So I think that we could see some nice moves in the future out of this. But guys, growing an account is one of the things here. You just have to try to hit base hits. You never want to try to get a stock you never want to try to buy a stock at 20 cents and sell it for $100. And the reason I say that is often when you buy a cheap stock, you're going to have cheap results, and the risk tolerance is going to be very, very, very high. It's always better to, if you're going to trade, to buy a stock at $1 and sell it at $1.10. And just do that consistently over the course of a year, and you'll be way better off. It's going to be a easier investment. And it's going to carry less risk. So, but that is how you pretty much evaluate stocks, guys. Any questions, feel free to ask. That is why we're up. That is why we are live. So stuff gets sold out of people keep buying it. Yeah, historically, when we get sell off, especially when we get sell off in the S&P 500, which represents the top 500 companies, okay? You can go on Google, you guys can go on your broker and look up SPY or VOO. Those tickers are the S&P 500. They represent the top 500 companies in the United States. Historically, over the past 90 years, through all the ups, through all the downs, so the bull markets, the bear markets, the 2008 crash, the dot-com bubble, the Great Depression, historically, every year, we have an average annual return rate of 10%. So if we get sell-off, where we get sell-off, okay, stock market correction, crash, whatever you want to call it, if we get sell-off, okay, it averages about 14 months to recover from that. Now, why would you not want to buy at a lower price? Simple as that. You always want to buy a position at a lower price, especially with an ETF where it's a broad range of investments, because you understand there could be a lot of good potential out of this play. So yes. Yeah, I think that we could see a lot of opportunity, given that over the past couple of days, just by looking at the S&P 500, the S&P 500 has sold off from its highs here. Let's see. The S&P 500 is down 6% in about a month, which is historically a good opportunity to buy the market. Somebody said, Kate said AMRX. AMRX. So this one does look good. Good upward trend. Let's change these. Boom. Okay, good upward trend here, which I like. Looks like we do have a possible trend line. Almost there. So you guys can see this long wick represents buying pressure. We do have some old resistance that could act as some new support. Looking at lower time frames, you guys can see that it broke down through the moving average lines. Now it's all about finding some support or finding some sort of breakout, some sort of trend line breakout or something like that. But AMRX looks good. Earnings is gonna be the 9th of this month. So note it in your trading journals, note it in, on your phone. If you're in a position, you always want to make sure pretty much when the earnings is coming out. It's very risky to hold during an earnings. And even looking back, I'm sure we can look back at this stock here. Looking back at this stock, let's see here. Earnings here. You guys can see it skyrocketed up. Earnings here, skyrocketed down. Earnings here. Little flat. Earnings here. Up. Earnings here. Down. So it's always very risky to hold a position during earnings, obviously, just given that. It's not... With earnings, the reason why it's so risky is because it's not really technical analysis anymore. It's more fundamental, and people start, and then you have more hedge funds join because they can buy a bunch of shares because the company is performing better, and they'll cause it to go up. Or if any hedge funds or larger corporations are holding it and they have a bad earnings, then they're more likely to sell, which will cause retail investors to sell. Bahamas is getting hit tomorrow at 8. Wow, hurricane. Well, hope you guys are all safe. Stay safe out there. If you guys are going to be in a hurricane, that is not good. But yeah, these are all the plays here for this week. It's one of those weeks where it's almost, in some cases, it's better to just sit back, sit on the sidelines, and then watch what happens. But don't forget, guys, check out our school where we teach people how to find these plays that are undervalued, all that stuff. If you guys are watching, you guys can use code LIVE for $50 off. So check that out. And yeah, I think we'll end it here. unless you guys have any last questions for me before I go about investing, money, trading, swing trading, anything along those lines. And then we'll end it here. So, guys, I hope you guys all enjoyed it. If you guys are new, make sure you guys hit that like button. Double tap on the screen before we go, and we'll see you guys in the next one. See ya, guys.